This is Paul, and welcome to the Sirius report. Obviously, I'm joined today by Ken, but more importantly, we're joined today by, once again, Eric Yeung. He's a good friend of mine, and it's always a pleasure to have him on our podcast. He's a minefield of information and understanding, more importantly, of what's going on with China and Hong Kong in relation to gold and silver. And given there's been a number of developments recently, we thought it'd be a good time to bring him back. So, Eric, welcome back and thanks for joining us.
Well, thank you, Paul, for having me on.
Oh, it's always a pleasure. So, where we thought we'd start is talking about these changes that have been made to taxation regulations in with respect to gold in China. And ordinarily, people would think that was probably not that interesting, but this is immensely interesting because it has very significant ramifications. And Eric's going to break it down and explain why it's important. And so, fire away, Eric.
So yeah, there's been some new gold taxation rules that were implemented by China on November 1st, and it made the news with Bloomberg. Bloomberg had an article out saying that, oh, China is canceling or you know, voiding some tax incentives, and that's going to be bad for Chinese gold demand going forward. I'm just paraphrasing, right? That's essentially what Bloomberg said. And as I explained to you, Paul, and also Ken, off camera, this is not exactly true. I mean, I think Bloomberg jumped the gun, and I did too. I went on a show with Manico 64 Mario just 2 days ago, and at that point, not all the information came out. So, but now what we have is, I would say, 90 to 99% of the full picture of what is going on. So basically, I'll just give your audience a quick rundown. What happened in the past is that you have investment gold at the SGE, and you have non-investment gold. So non-investment are the jewelry gold, and investment are the bars, from the SGE. Okay, so what they call investment standard gold bars at the SGE. So in the past, before November 1st, what happened? You have gold VAT exemption for the investment standard gold bars from the SGE. So right off the back, if you're a member of the SGE, or if you're a client of the SGE and you buy investment standard gold bars from the SGE, you're VAT exempt. And the retail customers of Chinese state-owned commercial banks in the gold accumulating program buying the recasted investment standard gold bars are also VAT exempt. So that's what happened before November 1st. And then on the gold jewelry side, which is the non-investment gold, in the past, when the SG members or the clients withdraw the physical gold from the SG vault, they have to pay a 13% VAT. But they get something which is called a special VAT invoice, a short form SVI, to offset that cost when they make their first sale after they are out of the SG. So off exchange, once they make the first sale, they can recoup the 13% VAT, or the proper term is offset, that they paid when they withdrew the gold. So essentially, again, zero, right, for these guys. But for the non investment gold, the final customer or consumer has to pay full VAT, so the 13%. and that's usually rolled in, and it's like an honor system. So if you are a SGE member or a customer of the SGE member, you're obligated to remit the 13% VAT to the Chinese tax authorities minus the VAT credit, so to speak, that you have from the SVI that I mentioned. Okay. So basically, again, like if you are a seller, you don't pay because you're fully, it's fully offset, right? It's the end customer who would pay the 13% for the gold jewelry, non-investment gold. For the investment gold, you just simply don't pay because VAT because it's fully exempt. So that's before November 1st. Now, the problem with that, Paul and Ken, is that in with that system, you also have a lot of recycled gold in the past. And the recycled gold, um, when they traded amongst themselves, none of these guys paid VAT. So it's like the Wild Wild West, essentially. These, like I'm talking about before November 1st. So they would, when they compete, like these Wild Wild West guys, they buy recycled gold, usually the small jewelry stores. Their price to the end consumer is often cheaper than a, let's say, a big jewelry store, because the big jewelry store, they're obligated to remit the 13% to the Chinese authorities. Whereas if you are a small jewelry store, a lot of the times these guys just buy recycled gold and they don't remit the 13%. Because the recycled gold in the past is not really traceable.
Now, interesting, real quick. India has, because of the tendency of the government to add these premiums, these VAT taxes, et cetera, when they want to control the flow of gold or silver in the country, that it would lead, of course, to much more smuggling. Now, I'm not implying at all that China is going to have a big issue with smuggling, but when you have these smaller entities that are not able to compete per se with the big ones who do pay that VAT, is there going to be any type of regulation, or has this been given any thought for the potential for there be that opaque sort of black market for gold and silver that's outside of the system?
So it's the other way around, actually. Before November 1st, it's the big guys that can't compete with the small guys. Because the small guys were more willing to buy recycled gold, and when they sell that gold, they don't remit the VAT to the tax authorities. You see what I'm saying? Whereas
Yeah,
if you are
absolutely.
a big guy, right? You pay upfront. You pay upfront the 13%, and then you collect from the consumer, and then you get an offset. That's how it worked in the past. So the small guys had all the advantages in the past because they were committing, I don't want to say it, but essentially that's what it is. They committed tax fraud and they thrived, okay, in that gray
Hmm.
area, right? So the small guys, so reverse of what you just said, Ken, they thrived because there's that gray area where they're able to buy all this recycled gold and they simply did not remit VAT.
Right.
Okay. And actually
Understood.
the SGE in the past ended up being the backup for the for the jewelry, small jewelry stores, right? Because when they run out of recycling gold, they have the SGE as a backup for the legitimate gold stream, where they can, collect the VAT from their end customer, and they probably didn't even remit. They probably pocketed everything. Okay,
Hmm.
in the past, that's what happened. But
And I can see
yeah,
why they would want this, because the SGE is seeking to not just be the forefront for Asia, but the forefront for the world as the center of the universe for gold trading, I'm sure.
Correct. So well, I'm getting to that. So that's like I just described what happened in the past, which basically diverted liquidity away from the SGE, as you can see what I described to you, right? So what happened on November 1st is this. What the Chinese government did is that for investment gold, if you are a Chinese state-owned bank, you can still buy the investment gold VAT exempt, and you sell to the end customer VAT exempt. So nothing changed for like the state-owned banks, right? You're a customer at ICBC or BOC or any of these state-owned Chinese banks, and you buy gold via the gold accumulated program, and you get up to, let's say, 10 grams and you withdraw, you don't pay VAT. Okay, has been proven already in the last week. So that didn't change. If you are a SGE member and you withdraw physical gold from the SGE, you are still VAT exempt. Okay, no change. You take the gold out from the SGE vault, you're a member, right? You don't pay VAT. And again, that has been, tested and proven already. So those guys that don't pay VAT. But once you are outside of the SGE and you are a SGE member, you sell it to the next guy, you have to charge that guy a 7% VAT. Okay?
Yep.
That's what happens. All right? So like
Got
you
it.
get they get an regular invoice, and the regular invoice is 7%. Okay? So after that second sale, so imagine this, you are a member, you sell it to a second guy. The second guy buys it from you, you don't pay VAT, but the second guy buys it from you, the second guy pays 7%. And then that second guy sell it to a third guy, that third guy have to pay 13%. But he get an SVI where he can offset that, okay, when he make the next sale. So that you see that sells how the Chinese government is stopping the SGE gold from basically flowing out any further than the first guy, unless that second guy is willing to pay that 7%. Does that make any sense?
Yeah,
Because let's say
totally.
you're the first guy, you pay nothing. You get it out from the SGE vault. How can that gold remain VAT exempt? You sell it through the SGE. You don't sell it outside. If you sell it outside of the SGE, you automatically incur a 7% VAT in that sense. Okay, for the standard investment gold. Now, let's say you are a jewelry maker and you want to buy what they call non-investment gold from the SGE. What changed? What happened? So now instead of paying 13% that you can offset later, you now only pay 7%. Okay? So what do we see here? Your costs of carrying the physical gold from that step, from withdrawing the gold from the SGE vault, is less than before, because before you pay 13%. Now you pay only 7. Okay? But the difference is that once you sell it outside of the SGE, the non-investment gold, you do not get any offset. So the 7% you pay, you don't get it back. Whereas before you pay 13%, but you get all of it back.
Yeah.
So it's a way to keep it within the ecosystem.
That's exactly it. So I don't like I mean a lot of people get pretty confused with this, right? Because it's not, as you can see, it's not simple. It's pretty convoluted. I have every single step outlined on my X account. So if people want to really get into it, they can read it on my X account. It's step by step. Fairly simple. If you read it step by step slowly, you'll get it, right? But like you said, Ken, the whole point is to keep liquidity within the SGE system. Because before you have all these OTC stuff going on, people directly buying from miners, etc., right? That divert liquidity away from the SGE. Both the new rules, basically, to put it simply, if you want VAT exempt gold, you have to go to SGE for that. That's it. That's the only place that you can get VAT exempt gold is at the SGE, Shanghai Gold Exchange.
Gotcha.
Okay. So I guess the next question is why is China doing that? Why is China concentrating all liquidity at the SGE? Why is that happening? So I talked to a couple of CTAs in China. They're the commodity trading advisors, the SGE members. And they said that within 2 years, with this new system, new rules in place, SGE's trading volume is going to go from 60%, around 60% right now of total gold trading volume in China to 80%. So we're talking about gold originate, okay? Not like, total trading volume in terms of like daily. We're talking about the gold that is where the gold is originating from, okay? Where the gold is originating from right now, 60% of that trading is from the SGE. The rest, OTC, recycling, etc. And with these new rules, 60% is going to go to 80. And one of the reasons behind this, Ken and Paul, is because the recycling guys, with the new rules, if they sell the gold that they got back from consumers to another institution or business, that would incur a 13% VAT. Whereas before, nobody cared. You see how that works? So the only way that the recyclers can get VAT exemption is to take that gold and sell it through the SGE, or they can mint their own bars and sell it through their own retail channels, right? But I'm guessing that even with the with this recycle volume probably potentially shrinking in the future because of these new tax rules, I think 80% is still going to go through retail. Okay, because some people, they just don't want to wait to buy their physical gold bars from the Chinese commercial banks. It takes sometimes like a week to get your gold bar. They like to go to the recycler because the recycler usually has the stuff ready to go. So 80% probably the recyclers mint their own bars and they charge the 13% and they remit it to the Chinese tax authorities. And the 20% of that recycled gold is probably going to go through the SGE.
Yeah, I think a good point to make now is the fact as well, this will go a long way to encouraging everybody to not speculate, but also to buy gold and hold on to it. And I think that's an important development as well, to remove as much of this speculation as possible and to get gold into hands with people who'd rather just hold on to it because it's gold and it's real money, etc. And I think that's an important part of the development.
Absolutely. It's like a butterfly effect, Paul. What's
Mm-hmm.
happening now, right after the new rules were introduced, people are lining up at the Chinese commercial banks to withdraw the physical gold. Because right off the bat, think about this. The investment gold bars, like I'm putting this in quotation marks because they're not really, real investment gold bars according to the Chinese government or the SGE, right? But the bars that you get from the small gold jewelry stores that they mint themselves, like I said, now there's a 13% VAT on those. Whereas if you go to a Chinese commercial bank, it's still zero VAT. So what happened there, right? All of a sudden, your volume at the Chinese commercial banks jumped up, like of people buying physical gold or withdrawing physical gold. And the Chinese commercial banks are all tier one SGE members. So they have to increase whatever, SGE gold buying contracts that they have. They have to stand for delivery for more physical gold. And not only that, by the way, ICBC, which is the Industrial Commercial Bank of China, we're all familiar with these guys. They are a LBMA member, and they also are a London Precious Metals Clearing Limited member, which is pretty important because that's the engine that runs the LBMA for its bilateral trade clearing, right? So I think what's going to happen, keeping all this in mind, is that the trading volume of the SG is going to shoot up. It's already shooting up because of the reasons I'm telling you. And eventually, ICBC, BOC, and a lot of these Chinese bullion banks are going to stand for physical delivery, even more than what they are doing already, okay, at the LBMA. And that's going to put a lot of pressure on the LBMA.
Yeah, absolutely. I mean, I think that's another important point to make with regards to all this. So I think at the end of the day, this is why it's good to get Eric to discuss this, because it's not just a dry subject. There are huge ramifications underpinning this. And this again is just, and Ken mentioned it, of course, is the objective for the Chinese is to make the SG and all its affiliate vaults that will be opened, whether it's in Saudi Arabia or anywhere else in the world, to be the biggest international gold hub. And again, it's the old thing of, if you add, well, you can't have a 1 ounce contract, but if you did, for every ounce contract, it's backed by an ounce of physical metal, guaranteed. The 1-to-1 ratio, and that is going to make Shanghai a very appealing destination internationally for people to trade and buy gold.
Yes, the Shanghai Gold Exchange is backed 1-to-1. And by the way, it has approximately a 70% withdrawal rate. So that's pretty high. That's like 70% of the contracts at the SGE are physically withdrawn by its members. Compared to the COMEX, I think it's like less than 10%
Yeah.
withdrawal rate in the past, right? So and then at the SGE, I believe the number for 2024 of physical gold withdrawn was more than 1,400 metric tons withdrawn. So that's substantial because that's the entire vault number, like the amount of gold that the COMEX has. Its entire vault is for, like, if you believe that they have that much, 1,400 metric tons.
Yeah. And of course, what it will do in the end is will further squeeze all the markets in the West and encourage more and more gold to head east. And that's always been China's objective for well over a decade, going back to when I first talked about enormous sums of gold heading from west to east. It's all part of the ongoing, I wouldn't even call it an end game, it's just an evolving move to drive as much metal east. And this is another policy initiative that will absolutely do that.
One
Absolutely.
thing.
I think, sorry, go ahead, Ken.
I'm sorry, Eric. Just to add on to what Paul was saying, the validation that so much gold has been withdrawn, now it gives the SGE credibility because one, they're trying and inviting the other nations around the world to store their gold, central banks to store their gold in the SGE, whereas in the past, of course, they stored it in the United States or in London. And then secondly, by the fact that they have facilitated, or for all intents and purposes, backstopped the currency, the yuan, with gold, where you can take your yuan, go to the SGE, and exchange it for gold and take it out. By the fact that it's relatively easy process to go ahead and do the withdrawals, that's going to give assurances to the rest of the world, like, hey, it's safe to store gold here. I mean, you can just use the example of Venezuela. If the politics of the West says you can't have your gold back, you can't have your gold back. It appears that's not going to happen in China.
I agree, Ken. I think a lot of things, interesting things are happening while they, launch these new rules. If you guys probably know already, just yesterday, Bloomberg came out with an article saying that Cambodia took China up on its offer of storing its gold, its new gold. They're buying some new gold, probably from the SGE, and they're going to store it at the SGE Shenzhen vault, the bonded vault. That's what they call it. So my theory on that is that eventually they're going to move that gold to Hong Kong, because Hong Kong, again, Bloomberg last week had an article saying that Chinese officials are in talks with Hong Kong officials at finalizing the clearing system for the SGE vote that got set up back in June this year in Hong Kong. So Hong Kong, if you guys don't know, or your audience don't know, the international banking system consider Hong Kong to be offshore to China, because Hong Kong doesn't have capital controls. You can move money in and out very easily. And as a matter of fact, there's no control on physical gold at all. You can, move gold in and out of Hong Kong without any tax whatsoever. So I think what's going to happen is eventually that gold is going to be moved to the Hong Kong vault. Now, another interesting thing that I got wind of, and this is not reported yet by any media, mainstream media, is that South Korea, one of my friends, have some contacts with people in the central banking circle, and he told me that South Korea recently bought approximately $60 billion US dollars worth of physical gold and silver from the SGE. If you guys recall, just a couple of days ago, South Korea and China renewed their currency swap agreement, which is around, I think, 56 billion US dollars worth. So all this kind of coincides, because the second country, I think, that is going to store gold at SGE vaults in Hong Kong or Shenzhen, if Hong Kong is not ready, I think it's going to be South Korea, because of the amount of business that South Korea does with China back and forth.
Yeah, absolutely. It's worth noting. This is also on the back of the US trying to make ridiculous demands for South Korea to give them 350 billion US dollars to spend on whatever they wanted to spend. So I think it's interesting to see these developments with the currency swap and them then buying all that gold and silver. I think that just tends to put the relationship that's developing between South Korea and China in the context of what the US thinks is going on with South Korea and clearly isn't. So, Eric, I think if you want to now, we could move on to the subject of another development that's going on in China with respect to silver.
Oh yeah, so again, this is very recent news. On November 1st, the Chinese Ministry of Commerce announced that silver and platinum, sorry, not platinum, it's silver and tungsten
And
are going
antimony.
to be, yeah, and tungsten, correct. And antimony, is it? Three different
Antimony.
metals?
Yeah.
Antimony. Okay, yes,
Yeah.
and antimony are going to be restricted metals that are going to be export controlled starting January 2026. So what does that mean? Because before silver, I'm just going to focus on silver because silver in the past, when you export it out of China, there's no restriction. You just need to do like a quarterly report to the Chinese Ministry of Commerce. That's it, or an annual report. I'm not sure, but you can check it out. It's just a report that you need to submit, but there's no restriction. There's no control. Now, what they're implementing is called a review and quota process. So they review so whatever you want to export, they got to review it first, and then they give you a quota to export the silver. So in my opinion, that's pretty much export control. They're not going to probably not going to ship any silver to the LBMA from this point on, in my opinion.
Yeah, absolutely. I think that's the whole purpose of this. It's also because, I mean, China's imported huge amounts of silver for the last few years, particularly, and that's deemed to be strategic metal, and it's a matter of national security. Okay, that's silver that doesn't find its way into obviously being utilized for industrial purposes. This is entirely different. This is silver that can be utilized for industrial purposes, and as you say, previously you could just sell it and it went wherever. Some of it stayed inside China, of course, and other it went wherever in the world. Well, this is just to ultimately put export controls in place. Why? Because that is going to put enormous pressure again on the COMEX. It will put enormous pressure on the LBMA, and also it will. It's part of this process that China and India, for that matter, been driving enormous amounts of silver from west to east. I think the desire is to keep that silver going east, and but I noticed, I mentioned this to both of you before we came on, that the USGS has just added silver in the United States to the 2025 critical minerals list. So even the United States is waking up to the fact that silver is an extremely important industrial metal now and going forward. And as usual with the US, it's a little bit too little too late, but they are finally at least recognizing how the importance of silver. And this is just another development where China is ensuring that there's no point in us buying enormous amounts of silver. It comes in, and then whatever percent just goes out the back door, and we have no visibility as to where it's going. And principally, I think, it's one of those things, for argument's sake, if a substantial amount was to go to Russia, they wouldn't care, for argument's sake. But if it's going west to the United States or the UK or Europe somewhere, that's an entirely different matter, and they don't want that to happen.
I agree, Paul. I think silver is probably going to be declared a strategic mineral in the US. It already is declared a strategic mineral, but I think when when the federal government in the US come back to work, because they're still not able to pay these guys right now, they're not working. But when they come back to work, the 232 analysis is going to be complete on silver, and silver is probably going to be fully declared as a strategic mineral. And at that point, maybe nobody big is going to be shipping any silver to the LBMA.
Well, there's a significant risk of that because, if the US designate it that way, then that will start to put further enormous pressure on them. And so that's a very logical progression of thought. And like you said, well, when eventually the government comes back to work, but at some point that will be realised, and then that puts further pressure on the LBMA for sure.
Yeah, I think it's interesting too. The U.S. back in the 1940s made silver a national interest, obviously for the Manhattan Project, and then once the war was over, silver was, you know, not restricted as much. But with AI and the fact that the U.S. has made it a specific and absolute necessity to win the AI war. It's not surprising, not only for the fact that there's really not a lot of silver produced in silver mines in the United States anymore, but geopolitically, where does the U.S. have to go? They're having to go to Canada. They're having to go to a lot of the countries in the Caribbean, etc. So this is going to end up, I think, more also being a geopolitical problem rather than just an economic one.
Yeah, for sure, absolutely. So, Eric, anything else you like to add to that or to discuss?
Well, I think at this stage of the game, we just need to wait for the dust to settle at the SGE. Like I said, I think China is in the middle of number one, concentrating on liquidity through the SGE. So, like I said, off camera is better bang for the buck, basically. They don't want liquidity to be spread out to other OTC platforms to purchase physical gold. They want all the liquidity to be concentrated at the SGE so that the SGE may potentially be a bigger buying power at the COMEX and also the LBMA, primarily the LBMA. But um, not to say that it's not already big. It's big, but it can get even bigger. Like some people estimated it can get 30% bigger and probably 10% bigger within the next 6 months. So that's number one. Number two is that I think with these new gold tax rules in China, China will no longer have a two-tier pricing system. So in the past, like I explained, the recycling gold in China is often cheaper than the gold that you can buy from the SGE. Even when the SGE was VAT exempt, the recycling gold was cheaper. So with these new rules, we're already seeing that recycling gold is higher in price than the SGE gold price. And for the reasons I mentioned, because you can no longer get VAT exemption unless your gold originates from the SGE. For the details, your viewers can read my thread, and like I said, I explain it step by step. So
Yes.
in terms of the silver restriction and China open up the Hong Kong offshore vaults and other offshore vaults and potentially using physical gold as a repo collateral. I believe we talked about that on your show last time.
Yes.
All this stuff is probably going to materialize in the next 6 months to a year. So I think what we just got to do at this point is to sit tight, wait, and let these things play out.
Yeah, absolutely. And it's not something that for me or you or well, Ken for that matter is remotely surprising. I mean, for me, it was said to me over a decade ago that in the future, China will utilize gold as an important mechanism for international trade. That's exactly part of what they're doing and will be doing in the future. And it's like, I think, can't remember who it was, some Chinese government official just came out with a very pithy remark going, this was about 3 years ago, saying, well, gold will be a very important component of the new financial system. And that was it. Nobody asked any questions, just a very blunt statement, but basically admitting exactly all the things that is being discussed today and how obviously gold will be a reserve asset and will depose the US dollar, US Treasury complex, which it is doing anyway. This is not a surprise to anyone. And it's very clear also and interesting how China's really accelerating things because I think it has in mind and its sense is that things in the West is becoming untenable and there's only so much longer whatever's going on will continue to go on. So it's best to get all the ducks lined up, and obviously to insulate themselves and the global south as much as possible from the fallout of what's inevitably coming the way of the West. So, anything else you'd like to add, Eric?
I think that's pretty much it, Paul. Like I said, we just need to wait and see what happens. We know what's happening right now, and if there are any new developments, I'm sure that you will bring it to your viewers' attention, and I will share it on my X account.
Yeah, and we can obviously discuss things as those developments, as and when, and in the future. So, well, obviously, Eric, thanks again for joining us today. It's much appreciated, and for imparting people with your knowledge and understanding and your wisdom of these things. And for me, it's extremely helpful because then at least someone else is saying what I'm saying, because I've tend to find that has been a big problem for a long time. So I appreciate that that you're there to also reinforce these points, because I think that it's extremely important for people to understand that, rather like many other things, gold and silver markets are going to and are in the process of radically changing, and this is another one of those discussions that exemplifies that point very clearly. So thanks again, Eric. Ken and I really appreciate you joining us today. And for the broader listeners, thanks for all the support you're giving us. Please like, share, subscribe, comment. Let us know what you think about this. And obviously, we appreciate, as I said, all the support we're getting. And with that, I'll say goodbye.